Let's move on to rates and borrowing power. One of the key macro factors that drives demand for housing and the ability to actually buy is the financing conditions behind it. The cost of credit and how available that credit is will impact macro markets pretty much everywhere. If you're going to be buying at a time where credit is crunching, it is a tide that is swimming against you. It's going to be harder pretty much all across the board. Lower interest rates, more credit will pretty much positively impact all asset classes, and in particular property, because people need credit to buy property in Australia. Definitely en masse, people need credit. Interest rates and borrowing capacity changes help drive a bigger macro change. So this is location specific, but the bigger macro change, you can go back on previous podcasts and get a real sense of the history of Australia's property market and how it's responded very closely to net borrowing power changes and interest rates. Want to add anything to that?
Yeah, I just think it's not location specific, but are you going to be swimming like with the tide or against the tide?
For our audience listening here, go back a few episodes, you'll see us talking about a potential 35% increase in borrowing power.